This is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, April 1st, 2020. Quick follow-up on the broad markets. I won't spend a lot of time there. I just want to kind of touch base on what's happened. Start out with the futures. Again, they paint a little bit more transparent picture and pretty clear picture. This is the NQ 60-minute chart. So where we started this morning, remember we were at that, we had tested this all day long, and there were quite a few replies that I made. Again, I encourage, if you're new to the site, come into the homepage, check the comment sections, because that's where a lot of additional commentary, questions by others, charts by others, and myself will be added. So let's see, this morning you can go down, you can see there's 19 comments below there, and mentioned some levels there, and I also shared my thoughts right here. For example, that ES and NQ had since broken out of those trend lines in first price support levels, which sparked a rally so far. I said, well, that does increase the odds, because somebody was asking about a gap backfill on here. It does increase the odds those upside targets will now be hit. I suspect the rally will get sold into early, falling shy of those potential bounce targets at some point today. And then where it was here, okay, there it was. Somebody asked about the gap. I think it was there. And I said, yeah, they covered the shorts and we're planning to re-enter. And so I shared my thoughts there too, as far as re-entering. I said, for what it's worth, while backfill of today's gaps, and I'm referring to SPY and QQQ. Remember, you're going to see the gaps on the ETFs because they close down overnight, where the futures keep trading. So you usually only get gaps on the futures on Sunday night when they've opened up after being shut down for the weekend. So that what I said, the gaps will be obvious bounce targets, and they're certainly possible, but I don't expect a full backfill today as gaps. Rather, I suspect this rally off those supports that has since been followed with breakouts above those downtrend lines and first resistance levels will be sold into soon, with another leg down to follow. So now let's look at those charts, and again, this how, and there it is. So we popped there was a trend line taken out. We'll zoom in real tight. So they did take the trend line out, and that's where buyers are going to step in. That's a clear trend line. Then they did. They stepped in. We rallied. Had from there, from the breakout point, it was good for a rally of about 1% or so, and then it got sold into. So SPY or ES here got checked. And another thing that was on the front page, somebody had mentioned, hey Randy, we never really hit that 2460, and I said, yeah, good point. We came very close. I think I had mentioned before, but the reason we bounced there without ES hitting that level is at the very same time we had NQ, the NASDAQ 100. This was a candle last night, the 1 a.m. candlestick in the morning, 1 a.m. last night, or at least that's Central Time there, not Eastern. East Globex futures trade. This is Eastern time, but I'm sorry, Central time. But either way, that is early in the morning. So pretty much the entire night, you can see NQ hugged that support, successfully holding that 75.40 support. Boom, 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 boom. Then broke out. Buyers stepped in. They took out this trend line. More buyers saw that and said, okay, buy signal. But like I suspected, that's what I was talking about. We fell shy of those bounce targets right there. I said that would be the maximum. Certainly a possibility, but my suspicions were just as that rally started to look to get good, like it was starting to get going, that's when they sold into it. Now, what have we happened since then? That's why I wanted to do the video here. We've had right now we just recently back tested. So here's our same trend line. It's not modified since this morning. Breakout. Took out those levels, and so far a failed breakout above this 76.20. You can see that's where we were consolidating since just after midnight last night and all morning. Failed breakout, boom, impulsive rejection. This is why swing traders, if you're not very active and nimble, you don't want to. It's not worth gaming trying to game that quick bounce. Active traders could. You could have trailed stops up, let it ride in case we would have hit that level, and then you would have been stopped out somewhere there on the reversal. Now, all right, so traders are going to see this as they have so far. This is a back test of a trend line, and they're stepping in. And so two things have happened since that last update. Well, we've now taken out the 75.41 support. That's bearish, and we took it out impulsively, and we're below it, so we're back testing. So where those, trading with the glass half full, meaning with a bullish outlook, are saying, okay, great, breakout back test, I'm going to buy that, and we're going up here. Whereas those seeing it, things with the glass half empty, meaning the bearish view, say, okay, failed breakout, and now a break of 75.40 support, and we're trading below it. So support once broken then becomes resistance. So therefore, and that's my preference to stay short right now. I think there's more downside to that those next targets I shared this morning. All right, so that's NQ. Same thing happened in ES, really. There's false breakout, failed breakout attempt over 2,500 or so, back test. And we did hit, and there's another thing, glass half fullers, optimists or bulls see that as, okay, great, breakout back test, and we hit that 2460 support. And maybe they're right. They go long and try to swing up here, whereas I suspect that support will break, and we're going to go lower. So like I said, for the swing trades, I see no reason not to sit tight short. In fact, I added another new swing short today. It was about as descriptive as I could be on that one. Let's talk on that one real quick. Trying to cover all the pitfalls because I get a lot of questions on this one and similar securities. Unfortunately, in a perfect world, Palladium would have a smaller futures contract size. This is a big contract. It's the leverage factor, and now the brokers have significantly reduced the amount of leverage borrowing power you can have. It's cut down. Interactive brokers cut it down by I think over a third. What they normally allow you to in your margin account trade on leverage if you're a futures trader or anything like that. And this is a big contract. But this is an option to short if you have a substantial size account and enough to diversify. You don't want to put all your money in Palladium. Trust me, that thing can go either way. It's a volatile sucker. But I'm going to show you my outlook on the trade, which was pretty much laid out in the trade setup, but I also want to show you a few other charts that were not included there. So the basis of this trade is several-fold. I did a couple videos, even one extensive video, laying out the case for a tremendous profit potential for what I, at the time said an impending bear market in palladium. Palladium prices have gone near parabolic, surpassed gold. There's been a shortage. Palladium, though it's a precious metal, it's more so the industrial use. It's used in emissions controls. Vehicle sales were at all-time high. We're going to get to that. And so there's several reasons why I think why I'm looking at tucking this one away as a trend short trade or a long-term swing short with profit potential well into the double digits. Again, if they don't stop us out, assuming it pans out. So from a technical perspective, the basis for this trade, this is what we call an ascending broadening wedge pattern, aka megaphone pattern right there. So you bounce around in there, you have 3 tags at the top. That's what you want to see, at least 3 touches up top, several on the bottom. Of course, you can Google search that term. We broke down there, boom, impulsive drop. And I think I mentioned at the time, there were a ton of questions, again, all addressed in that post. You can't, right now, Interactive Brokers has plenty of shares of PALL to short. Of course, you can short futures whenever you want. That's not like, on an ETF like PALL or any stock or any other ETF for that matter. If you want to short it, if you have a margin account, your broker has to be able to borrow them from somebody else. That's how shorting works. It's not a magic thing. You want to short Apple? Guess what? You're shorting your neighbor's shares or somebody else. Your broker is going to borrow shares from someone else who has a margin account, who has allowed those securities to be pledged for collateral or borrowed against. And what happens is if they don't have any shares or everybody's already short and they don't have any more to give you, you can't short. I can already, as I said, in their Interactive Brokers, typically I've been with, I have multiple brokerage accounts, but been trading with IB for many years, and they consistently have the best availability of hard to borrow shares. So we're going to get to PALL in a second. That's the ETF. This is the futures. But again, I just want to kind of lay out the technical basis for the trade, which is again a back test of that ascending broadening wedge pattern. Here we had a bearish rising wedge pattern which broke down, and impulsive leg down. Like everything else, it got a little overdone, a little too much too fast, just like the stock market. A little too much short interest, a little too much put buying, all that other stuff with the, at least with PALL, buy puts and on futures. But you just trade them directly, and that's it. You hit that support. 1379 was a pretty good support. That's where it reversed, and one heck of a snapback rally. So what I think happened, a couple things. I think a lot of shorts piled in, maybe a little too late, looking for that big move. So I like the timing on this one. Like any trade, it either pans out or it doesn't, but it's objective. And I was a little cautious on the entry. You could certainly short here in advance. On the back test right here, we've back tested a couple times and we're rejected. But what I like is right here. And this is the basis of the trade on the site. Which one am I looking at? Okay, this one right here. We have I have two trend lines. So you have this uptrend line plus the 2116 support level right there. And so if and when they both go, that should correlate with a break on that entry trigger on PALL. I'm going to get to that chart in a second. So that's, like I said, that'll help minimize the chance of shorting it too early if you wait for a solid break on PA, if you're shorting PA, or even if you want to confirm an entry on that PALL trade, you want to see a nice break down below there on palladium futures. Again, we had negative divergence at the high, everything else. This trend indicator is solidly in bearish territory, meaning below the zero line. When the PPA signal line, the 9 EMA, in this case the white line, is above that zero line right here, then the trend's bullish. Below, it's bearish. So bearish right here, said get out or be short. A little whipsaw there, but for the most part, palladium's been in a bull trend, and it's reflected here. So now it's clearly in a bearish trend, and so I'm viewing this as a snapback rally, a bear market rally, and so this is probably the first wave down, with quite likely another wave to come, targeting at least this 1289 level. But I'm going to show you the potential for a lot more on this one here in a second, depending on how things go. Okay, PALL, this is our proxy if you don't trade futures. This is your only other direct play. When I say direct play, this is palladium ETF. There's one out there, I think, that combines platinum and palladium. It's long. There used to be a short ETF, and that was taken off the market. And to the best of my knowledge, they haven't added anything back. Again, that is a direct short on. So inverse shorts are not an option for you. If you're gonna, in other words, you can't profit from this in an IRA. You can. Something I didn't tell you earlier. I mentioned how you can't short stocks in an IRA. You can't short ETFs. Hence the reason I'll use those inverse ETFs as official trade ideas. It makes it easier for those people that want to hedge up or even profit from a drop in a security or a commodity or something in their IRA. However, unbeknownst to most people, you can actually short futures in IRA. At least Interactive Brokers will let you do it. You just have to have what they call a margin IRA. You can trade actively in there, whereas every other IRA you can't. You hit this thing called free riding provision. If you buy and sell too many stocks or ETFs within your IRA within a short order, you end up making a new purchase with unsettled funds from a previous trade you closed out. And when that happens, you're going to get an ugly email or letter from your broker either warning you or outright freezing your account, because those are regulations. They call it free riding. You can't purchase securities in IRA with unsettled funds, but you can with Interactive Brokers. Trade away, again, if you're an active trader. I'm not encouraging that for anybody that is not experienced or an active trader. And again, Interactive Brokers will also let you short futures contracts, outright short sell. Again, it's got to be a margin IRA, and you can do a Google search. They'll explain that on their website. All right, PALL. So the basis there. Okay, we have a pretty decent. This roughly correlates with that, or pretty much correlates with that same support level. What was it? 2116, I think, on palladium futures. It's about 210.77. So I gave it a little bit margin of error to help prevent a whipsaw, saying that a break below 207 on PALL, the ETF, palladium ETF, should take the palladium futures down below that comparable support. Big old gap right here. That's the first target for our trade, second target, and third target, which roughly correlates again with that same level I just showed you on palladium. We'll go back to that. That is right here. Those are here's the lows back from May right there. Big level on palladium. We reversed just shy of it because there was pretty good support here before, but I think we get down at least there on the next leg down if there is another one coming. This could all be moot if we're stopped out on that trade, and if so, let it go. Don't fall in love with long or short position in palladium, because she will burn you. This will hurt you. If you were, let's say, late to the party here and tried to short palladium down at those recent lows, and you just wrote out this counter trend bounce, well, that counter trend rally right there, 75%, and just a couple. Actually, most of it happened in just a few days. So lesson be learned. That this thing can move. Just if you think your position's getting underwater and it can't possibly go any more underwater, well, meet palladium, because like I said, that thing can really move. All right, but I like it. I like the risk reward. We have our stop in place. We have a lot of downside potential. Now I'm going to talk about longer term potential here. Palladium prices. We're looking at this. This is macrotrends.net. They have some great charts on here. Here's a long-term chart of palladium prices going back to 1987, and what you can see here, the recessions are shown in gray right here, the shaded areas. And so the beautiful thing about this is these drops here. I don't have a measuring tool on here, unfortunately. But I've done this in previous videos, and these drops are about 70% or so. And you can see palladium, because it is more of an industrial metal really than a precious metal, it is going to go up and down with the economic cycle. When the economy is strong and auto sales are rising, demand for palladium and platinum will go up because of the fact that they are used in emissions control in vehicles and some other industrial uses as well. During a recession, things top, and because this is such a cyclical metal, these trends are huge, and the drops are very large. And again, this is log scaling, so it's hard to really gauge how much those are, but you can go on here. If you go on to macrotrends.net, you can just put the little bubble, put your crosshairs on there, and it'll tell you if it's hard to sometimes snap to it. You really got to play around, so I'm not going to do it right now. But you'll get the value if you can get that dot right on the highest number, and then go down to the bottom number there, and then just take the difference to calculate the percentage drop or the gains. And so that's it. So I just want to say that if you are a believer that we're just now in the early stages of a very bad recession to come, possibly a depression like they're talking about, the D word's being thrown out more now because of the impact on coronavirus that coronavirus is definitely having on the economy. That is not opinion, that is fact. The big question everyone's asking is, when will it end? When will the worst be over? And will it be a V recovery or not? I don't know. All I know is that usually when cycles break, you don't see any shaded lines here, right? Because it's going to be months before the next GDP report comes out. We just had one a couple weeks ago, a week or two ago. So you're talking 3 months away, and that will certainly show a contraction. But technically, a recession is 2 consecutive quarters of negative GDP growth. So it's really going to be, I hate to tell you, it's going to be 6 months before the government tells you officially that we're in a recession. But then the lines will go here, and there'll probably be a lot of after the fact revisions. But I just wanted to show you that there's no mistaking that these palladium has a huge downside once the cycle has run. Yes, demand shortages or supply shortage issues and all that, but again, when supply or when demand falls off a cliff, just as it has with crude oil recently, prices can collapse, and you're looking at almost a bubble, that huge lift in palladium. And you can see last time we had such a strong advance like this leading up to 2000. Okay, so don't be surprised if I extend targets on that trade, but also I may close it out because one thing I like to do even during bull and bear markets is game the counter trend trades, because they're powerful. Bear market rallies, they don't look like much on this huge scaling, just like bull market corrections. Corrections within bull markets can be pretty strong. But I just wanted to say, that's one. Unfortunately, I'm going to say this now. You're probably not going to be able to tuck away a short position in PALL if you do short it for a 50 to 70, 80% drop. Why? Because of what I said in that post. It is a hard to borrow security, meaning it's not a lot of shares of it. It's not like how many times have you been at a cocktail party or whatever, and somebody said, "Oh yeah, I'm long PALL right now," or "I'm short PALL." No, you talk about Apple, the market, SPY, QQQ. There's tons of liquidity, tons of shares out there, so you can borrow. You could short SPY and ride it to the very bottom of the next bear market, and not probably have it called in from your broker. But PALL, if there's not a lot of shares around, then they can call that trade early and on you. But hopefully if they do, they're not going to call it in on right when it has, at the peak of a counter trend bounce. Hopefully they'll call it in on you if they do, even if they short it. And you might not want to short it. It might not be your cup of tea with those big price swings. All right, let's talk about the other things that might impact this trade. Auto and light truck sales. We're looking back here to the mid 70s. And, like I often say, all recessions start when everything is booming. There's an old saying in the markets, it's always darkest before it's dawn. Just before dawn, that is. You think back to 2009 as we're heading into the lows of March 2009. I know this because I was trading actively back then. Everybody seemed to think the world was going to come to an end. There was no glimmer of hope. The banks were going to fail, even though the government had tried to bail them out. Everything was looking bad, but that's when you wanted to buy. And the same thing holds true in reverse, I like to say. And this is just my saying. It doesn't really make perfect sense, but it's always brightest just before dusk. So meaning that, at the top of a bull market, think back just a few months ago, everything was hunky-dory, rosy, economic forecasts, outlook. There were really very little cracks in under the hood. There were divergences, everything that I've warned about for a long time, but those are things that are pending as far as prices. We hadn't had any sell signals. The trend was solid. They were buying dips like crazy up until recently, and that's that. So what I wanted to show you here is we look at auto sales. And we go back, and this was in the 70s. Times are a lot has changed since then. We're going back many, many decades, but for the most part, I'm going to draw a line right here about the 18 million level on new vehicle sales, and you can see there's a few aberrations, a few spikes through there, but that tends to be about the ceiling. It was certainly the ceiling here in the late 90s throughout. When we peaked at that, we had a quick little blip recession there. That was mainly caused by the dot-com bubble and some other things, which took the market down and then kind of triggered a relatively short recession. But then you can see here as well, we peaked and we rolled over. And so we peaked again at that level and we're rolling over. So, only time will tell. I really hope, for everybody's sake, I don't want to see a recession, but, when the likelihood is strong, you have to acknowledge it, and you can do one of two things. Either move all your money out into cash, put in CDs, treasury bonds, and ride it out, or try to profit from it. And that's part of what we're trying to do here. So if we do drop, I'm just trying to show you that this chart, I can't overlay it right now. I'd have to use a different charting program to overlay, but you'll see palladium in the auto industry. And again, this is, these are meshing with these drops aligned with recessions. You have a recession, you're going to see a drop in auto sales. And so that's probably where we're going here. And what that's going to do, that whole shortage, the reason palladium prices have been soaring over the last year or so is because of, again, a shortage of it out there, and a lot of cars being built and sold. So I think that's going to come to a screeching halt here. I'm pretty sure the dealership lots are empty right now. We'll see how long that lasts. And then finally, the other one, again, it all just kind of ties in together. It's everything. This is U.S. national unemployment rate, and just like I said, recessions start when unemployment's at record lows. So, like everyone, those that were longer term bullish in the stock market and the economy, they've been saying the same thing for years. Oh, super low unemployment. Low inflation, it's a Goldilocks environment, Goldilocks. Well, again, that's where all recessions start from, the historical low unemployment, because from that point there's nowhere for the unemployment numbers to go but up. And I don't know why this one's not reflecting. Maybe we don't have the national. No, we do have. We had a huge spike. Oh, that was unemployment claims. So maybe this chart is yet to be updated, but yeah, you're going to see, as we all know, this is going to look like this. We've seen one of the sharpest upticks, I think, since the Great Depression. So again, and this just lines with what's it showing us. Well, the last recession right here, then before that right here, and so we're going to have a line right here, almost certainly at this point, going forward. And again, that kind of just goes into the whole my outlook for the stock market as well as palladium. And given the two, I think palladium, as I've made the case, has a lot more downside to go. But like everything else, it's volatile. It should only, if it even meshes with your risk tolerance and whatnot, it should just be one small piece of the pie. Here's your pie, here's your portfolio with asset allocations. And who you are is going to depend on what that mix looks like. This could all be cash. You might want to ride this bear market out 80% cash, and then maybe you want to try to profit for some short trade ideas, commodities, even longs that I might share. You might allocate 20% of your portfolio to trading, or you might be 100% invested in this market, shorting, going long certain things, bonds, stocks. But the point being that position in palladium should only be a relatively small sliver of that pie, not 100% of your portfolio. And that's about it. We'll just wrap it up here. It's QQQ. It's getting close, coming up on that next target there, about at exactly at 182.56. As of now, I wanted to show you one more thing right before we wrap up the video. Let's look at these the 1 minute charts of SPY and QQQ here. Get rid of all these lines real quick. What we're looking at is potential flagging action here right now. This is a 1 minute chart of QQQ. Let me see if it shows better on the 5 minute for you. Yeah, we can do it on this 5 minute. What you have is a possible bear flag right here. You have this today, an impulsive move down. There was that rally earlier today right here. We went up, and then boom, sharp leg down, and we appear to be flagging right around that support I showed you earlier. So we could get another drop here into the close today, or possibly into the close and then carry through to tomorrow. That's what QQQ looks like. They show well in the futures actually right now. I could probably show you that. Let me do this. Let me pause this and just move this screen over here. Here's what we're looking at on the bottom. Direct your attention to the lower right of the screen, bottom right of the screen, and show you. These are, here you have ES. That's a 5 minute chart of ES, where it tells you right there, 5 minute. ES, 2 minute chart. So these are 2 minute candles. Here's that sharp leg down. You can see it here as well. Little flagging type action there. And so if we get a big thrust down through there, that'll clearly take us down below those supports. We're pretty much below them now. The market's trying to hold on to them, but that would be the scenario. This is RTY, small cap futures here. You can see that's where they locked limit down last night. That's why it looks like that. They hit the 5% floor, stayed there all day. The market opened, then they're allowed to move beyond that price once the regular session opens at 9:30, and they just tanked. So everything's had this impulsive leg down. Like I said, that as much as we're down right now, I think there's still a decent chance we could go down even more this week, whether it's today, later in the session, tomorrow, Friday, or all of the above. So, like I said, for now, just for swing positions, I'm just sitting tight, and I'll try to. Oh, and the final thing, this is what I wanted to get at too. In the last video I did today, I threw out there, I welcomed any ideas on companies that might be uniquely positioned to benefit from COVID, like those pizza companies, for example. And after I did that video, I had we called in a couple of pies from Domino's. My son went and picked them up. They're actually sitting out there right now, ready for me to go eat. Probably cold by now, but great, it comes out of the oven. I told them, pop the trunk of your car, don't even roll down the windows, pay with the credit card. They pop the pizzas in the trunk. It's so those that's where people are. I think again they may benefit. They could get sucked down if we get a really impulsive broad-based sell-off. Like I said, everything tends to get dragged down. But so where I'm going with that is, I threw out, if you have a stock with a fundamental story that you can think of that may benefit, throw it out there. And here's one, request an analysis on CVM. Now there may be a story there, and that's what I said. If there's a story, let me know. Otherwise, this is not, I can't open up to just providing analysis on every stock. I'll get dozens of requests. I'm already behind as it is. And what I said in here, gold members, benefit of a gold membership is, and I haven't spent much time in the trading room lately because of the movement in the markets. I'm focusing on the trade ideas that we have, posting constant updates on the homepage so everybody can see what's going on, because things change hour by hour, minute by minute in this market versus day by day or week by weeks. Some of you know there was a period there last year where the market was just going up day after day after day, and there's nothing new to report. We're in an uptrend. There's no sell signals. Once in a while, we'd start building some divergences. We'd have little trend line breaks, but it was like, it was like watching paint dry. Well, here it's the opposite. So what I'm getting at is, yeah, give me if there's a story behind it, just let me know and I'll look into that. And if there's something compelling in the charts, otherwise I can't open this up as just, hey, because I'm getting requests on Caterpillar and U.S. Steel, and unless there's something that I'm missing. If anything else, COVID should impact those negatively. That's not a positive, catalyst that I can see for those companies. Might be beat down, and again, if any individual stocks or sectors are covered in a video on the homepage, you can ask a question on those or anything closely related to that. Otherwise, just share if you have an idea. A story stock is what I'm looking for right now, like those stories that I gave you, like the other one I shared today that Mallinckrodt, just went into clinical trials in Canada for some inhaled something that was going to help COVID patients. Once that stuff is, once it gets into your lungs, it is really, really bad news. So that is a company. If those clinical trials go really well, the potential for especially a small company like that to move the needle is huge. So that's what I'm looking for. And again, gold members, if you want an opinion on something that I haven't covered, that's part of that. I'll do my best to get in the trading room and get back to you on those when I can. I can't make any promises now because I'm trying to keep my head above water with the analysis first and foremost on the markets on the front page for you and everyone else to see, and then time permitting, I go in the trading room, stop in and post some any setups that I see, day trading stuff, additional swing trade setups, and try to get back to any questions. Okay, I'm gonna wrap it up here, guys. Get the video out to you. And we'll do an update today if anything changes, significantly compared to what I just showed you right now on the charts. I'll certainly do an update. Otherwise, if it's kind of just status quo, maybe we'll skip the end of day update today. This has been Randy Finney with Right Side of the Chart. Hope you